Well, investing in China, that is where we're talking about right now. And our next guest has written a new report that says generating returns in Asia demands active and non-traditional approaches. He is Henry McVey, head of global macro and asset allocation at KKR, where he helps oversee about $60 billion in assets. Henry, great having you on the show.
Thank you. Glad to be here.
You just got back from China a week ago. What'd you learn?
I guess the most important thing we learned is that inflation is starting to come down, and that's really been the bogeyman of China. There's always a tension between growth and inflation, and I think what you're seeing is, at least in the near term, cyclical inflation is starting to abate, and that's a very important positive for that part of the world.
Why?
Because inflation, when it's high, it keeps their central banks on alert. In China in particular, they're trying to employ 15 million people per year that are moving from the rural to the urban area in China. So you've got to have lower inflation. You can't have runaway prices of food or real estate. So for the central bank in China, maintaining an inflation rate below 5% is one of their key objectives.
Here's the flip side, though. Inflation drops, but so does growth, right? GDP's come down to 9. Maybe it slips from there. What do you think about GDP?
I think GDP is going to slow, but I don't think that's all that bad. I mean, having a moderate growth somewhere between, let's say, around 8%, that's a more normal growth rate than where we've seen before, somewhere even in the low double digits. So I think it's important to ease the inflation concerns. I also think what we're saying is that the central bank there will have some flexibility to move to more of a neutral stance or even an accommodative stance in terms of monetary policy going into 2012. I mean, you've been talking about it all day. The world out there is a pretty scary place. It's nice to know, we're expecting next year that about 40% of the growth in global GDP will come from Asia, and that is going to be the engine of growth. And given what's going on in Europe and some of the muddling through in the U.S., you need to have inflation slow over there.
Hey, let's talk. I mean, 44% of global GDP growth coming just from Asia. And I know that that's Asia. China's what, about a half of that, roughly? Fair enough, about half, right? About 20%. Yeah. So where does that come from? Is it the infrastructure projects over there?
China's got a very unusual economy. The U.S. is about 70% consumption. They've got about 34%. What really drives their economy right now is fixed investment. The government has been trying to move towards more of a consumption economy, but it's going to take time. I think people think you can turn the Chinese economy on a switch and say we're going to move from investment and exports towards consumption. It doesn't happen like that. People are moving out of the rural areas into the city. They're making money. They're saving that money, and so it's going to take time. And the challenge for the Chinese central bank is essentially to allow that growth, but not allow real estate prices or inflation to get out of control. And I think that it's a delicate balancing act. I've been going to China since for 16 years now, and what I would say is that there are always episodic kind of bouts of things being really good and really bad. And what I'd say is things have been tough over there. You've got companies going out of business from lack of credit. It's still a challenging environment, but things are starting to improve on the margin, and I don't think that's reflected in people's attitudes or some of the prices.
I was over there in April and went to some of these ghost cities, right? Cities that are built for 1 million people, but there are only 28,000 people there now. It's staggering, the amount of growth. I mean, we build a highway, they build a highway of 10 lanes. I mean, look at that. It's empty. I mean, is that why it's been growing? Is that why the GDP has been growing at 9–10%?
Well, I think one thing to keep in mind is consumption has been growing about 18%. U.S. consumption is growing about 2%. So there's always a lot of focus on the fixed investment and the real estate, but there's a really good consumption story going on there. So from an investment standpoint, I would focus on that. Second, I would say on real estate is you are bringing 15 to 20 million people from the rural areas into the urban areas each year. You do need housing. So it's not going to be a perfect marriage between supply and demand. And I think of one of the areas where there has been speculation or excess growth has been real estate. The government has been clamping down on that, and so it's clearly something to keep an eye on. I don't ascribe to the bare thesis that the world's going to end in terms of housing, but it's clearly something where there's never a perfect match between supply and demand. So you are going to have periods where cities have sprouted up to take people in, and it takes time. And so this is not this is an aircraft carrier. This is not a small boat.
It takes a long time to turn an aircraft carrier.
You got it.
All right, you guys at KKR have have, in theory, an arsenal of about $60 billion to deploy.
Right.
Where are you putting the money in China? How do you take what we're talking about now and actually put it to work so it produces returns?
A lot of what KKR does, their bread and butter has been in the private side. So there's clearly a lot we've done in China and India and Indonesia, and we've done it across consumer. I said consumer is one of the big themes, as well as some non-traditional financial services, as well as infrastructure. Those would be the three big areas. The firm has also got quite a good arsenal of talent on the public side, too. So we do special situations, we do distressed investing, we do public equities, and so we're building out our presence there. So pretty much the full suite. I think sometimes people think of KKR, given the history of the firm on the private side, but we're a solutions provider. We're providing capital to all different areas of the economy, and clearly Asia is one of our strongest growth areas right now.
And for someone who's at home and says, wait a minute, I can't give my money to KKR, I want to buy the FXI, the China ETF. Is that a legitimate way to try to get exposure?
It is. I don't think it's the best way to do it. I think generally you've got to pick individual stocks if you're going to try to access the public markets. Generally, though, the ETF doesn't get you the type of exposure that we would like. 76% of the Chinese index is in state-run companies. Less than 3% is in consumer stocks. If consumer is one of the biggest themes, you've got to think outside the box to get access to it.
All right. Henry McVey, head of global asset allocation over at KKR. Henry, thanks for joining us.